Part 3. Identifying beneficial owners by percentage ownership. In Part 1, we showed you how to create your personal account. Your personal account is your private data locker that contains the PII required if you are a beneficial owner of a reporting company under the Corporate Transparency Act. In Part 2, we showed you how to create a company account and how to invite other members into that account. In Part 3, we're going to describe the process you should follow to determine who are your beneficial owners. Please note, this video is not legal advice. Although we are going to talk about the law and the regulations that FinCEN has adopted, our discussion is not legal advice. The Corporate Transparency Act and FinCEN's regulations are complicated. You should retain an attorney to give you advice on how these laws apply to you. Our description of these laws is for educational purposes only. Now here we go. To determine beneficial ownership based on ownership percentages, we first begin by calculating beneficial ownership percentages at the individual level. If stock in your reporting company is owned by another corporation or LLC or other legal entity, you need to look through that entity to determine the percentage ownership of each individual at their individual ownership percentage. Second, if any stock in your reporting company is owned by a minor child, do not disclose the PII of the minor child. Instead, provide the PII of a parent or guardian. Third, if stock in your reporting company is held by a trust, trustee, nominee, or custodian, consult an attorney to apply FinCEN's regulations for these special circumstances. FinCEN has regulations that determine who is the beneficial owner of stock that is held in a trust or one of these other arrangements. Again, FinCEN's regulations can be complex. There can be criminal penalties involved if you report incorrect information. Please consult an attorney before making a final determination regarding your beneficial owners. The Corporate Transparency Act requires each non-exempt reporting company to identify its beneficial owners. The Corporate Transparency Act defines beneficial owner in two ways. First, you are a beneficial owner if you own 25% or more of the reporting company. Second, you are a beneficial owner if you have substantial control over the reporting company. Each of these measures, percentage ownership and substantial control, are defined in FinCEN's regulations. To calculate the percentage ownership that an individual has in a reporting company, there are 4 rules to follow. First, we're going to calculate percentage ownership based on a fully diluted basis of the company. Second, if the reporting company is taxed as a partnership for federal income tax purposes, we're going to calculate the percentage held of the capital and profits interests in the entity. Third, if the reporting company is taxed as a corporation for federal income tax purposes, we are going to follow FinCEN's corporate ownership rule to calculate the percentages. And finally, if none of the foregoing rules provide us with a reasonably definite manner of measuring the percentages, we are going to follow FinCEN's fail-safe rule. And your attorney can find these regulations in 31 CFR 1010.380, subsection D-2-3. First, measuring on a fully diluted basis. Measuring on a fully diluted basis means that we calculate percentage ownership assuming that all options and convertible securities have been exercised. We do that even if they are not presently exercisable. As a practical matter, to do this, you will need to create a spreadsheet listing every owner in your company, going down to the individual level, and then measure their percentage ownership based upon the conversion of all outstanding options and convertible securities. Next, if your reporting company is taxed as a partnership, we measure ownership percentages based on the percentage of the individual's interest in the capital and profits interests of the reporting company. As a practical measure, this requires you to take a hypothetical liquidation of the company and then determine how those proceeds would be distributed based on the partnership's partnership agreement or LLC operating agreement. The percentage that each individual receives can depend on the hypothetical liquidation value. Third, if your reporting company is taxed as a Subchapter C corporation, ownership percentages for each individual are equal to the greater of the total combined voting power of all classes of stock and that individual's percentage of that vote, or the total combined value of all the ownership interests of all the owners in the company and the percentage represented by that individual's percentage of that total. For each individual, if this corporate ownership rule applies, you would take the higher of those two percentages. And then finally, if the foregoing methods do not yield a measurement with reasonable certainty, then any individual who owns or controls more than 25% of any class or type of ownership interest in the reporting company is a beneficial owner. As a practical matter, the fail-safe rule will probably apply in many cases. Each of the two measurement rules for partnerships and for corporations require the calculation of a hypothetical liquidation of the company, determining the percentage that each individual will receive. Since that hypothetical liquidation depends upon a hypothetical valuation of the company, in many situations it will not be possible to determine the percentage that each individual would get with reasonable certainty. As a result, we will often be using the fail-safe rule to calculate who is a beneficial owner by virtue of their ownership of 25% or more of any class or type of ownership interest in the reporting company. Those are the 4 steps involved in calculating the percentage interest of each individual to determine whether they are a beneficial owner. Your next steps should be, first, to calculate the percentage ownership of each owner in your cap table. Applying these rules, determine which ones are beneficial owners, and then add them as beneficial owners in your company account. We showed you how to do that in part 2 of the video series. Then, go ahead and determine who else might be a beneficial owner based on substantial control. We will show you how to do that in our next video. Thank you for watching, and stay tuned for more updates on this channel.